Welcome back to MarketSnap, your daily rundown of everything that moved in the world of markets. One name just added nearly $500 billion in market cap in a single session, and it's not the only story. We're unpacking NVIDIA's blowout, the bond market's quiet rebellion, and why the Fed's new chair might be the most important person in the room right now. Let's dive in. It was a day of two markets. The tech-heavy NASDAQ ripped higher, while the Dow barely got out of bed. The culprit? A single earnings report that reignited the AI trade and sent a shockwave through the entire semiconductor complex. But underneath the surface, there's a lot more going on, from a treasury market that's flashing warning signs to a Fed chair who's about to give his first big speech with everyone watching. Let's start with the scoreboard. The NASDAQ composite surged 1.6%, adding over 400 points to close near 26,541. The S&P 500 wasn't far behind, up 0.7% to just shy of 7,731. But the Dow, it managed a paltry 0.2% gain, and the Russell 2000 was similarly muted. The takeaway? This was a growth stock day, plain and simple. And the VIX? It dropped nearly 5% to 14.5, signaling that despite all the macro noise, traders aren't exactly terrified. The S&P 500 is now sitting just about 1% below its all-time high. The index has been grinding higher all month, but today's move was almost entirely driven by one name. When you strip out the AI complex, the tape was actually pretty mixed. That's something to keep in mind if you're looking at the headline number and thinking everything's rosy. The NASDAQ, meanwhile, is the clear leader. It's up over 28% from its 52-week low and is knocking on the door of its record high of 27,190. The AI trade is back in full force, and today's earnings report from the world's most valuable company poured gasoline on the fire. Speaking of that report, NVIDIA absolutely crushed it. The company posted triple-digit revenue growth and guided to roughly 70% growth for fiscal 2028, which is just staggering for a company of that size. The stock jumped nearly 10% in a single session, pushing its market cap back above $5.5 trillion. Analysts are already scrambling to raise price targets, and even the famously cautious Michael Burry, yes, the big short guy, said the stock is undervalued, though he did add a note of caution about chasing it here. NVIDIA wasn't the only one ripping higher. Robinhood surged nearly 14% on the day, and Tesla added over 5% after announcing a semi-event for late September. Southern Copper and Freeport-McMoRan both jumped on the back of copper, hitting a fresh record high. More on that in a minute. Goldman Sachs was up nearly 4%, and Cloudflare added 5%. It was a broad risk-on day for anything with a growth or AI angle. On the flip side, the losers list tells a different story. Alibaba dropped over 8% amid a securities fraud lawsuit and broader weakness in Chinese e-commerce names. Marvell Technology fell 5.6% ahead of its earnings report, and the utilities complex got hammered. Southern Company, Sempra, and Xcel Energy all dropped between 3% and 5%. That's a notable move. When utilities sell off that hard, it's usually a signal that bond yields are moving higher and income investors are rotating out of defensive plays. And that brings us to the bond market, which is arguably the bigger story here. The Treasury just auctioned $44 billion in 7-year notes at a yield of 4.512%, the highest since December 2024. Yields are creeping toward multi-year highs, and the chatter is that the bond market, not the VIX, is the real fear gauge right now. The national debt just hit $40 trillion, and interest payments are starting to snowball. That's a structural issue that isn't going away. The reason everyone's watching yields so closely. Fed Chair Kevin Warsh delivers his first Jackson Hole keynote tomorrow, and there's a ton of uncertainty around what he'll say. Prediction markets give only a 20% chance he even mentions the bond market, and less than 10% that he says, rate cut. Meanwhile, several Fed officials, including Boston's Collins and Cleveland's Hammack, are openly talking about the possibility of a rate hike if inflation disappoints. Consumer prices are running at a 3.7% annual clip, nearly double the Fed's target. Warsh has to pick a side in this bond market battle, and investors are holding their breath. There's also an unusual dynamic at play. Treasury Secretary Bessent is stepping closer to terrain long treated as the Fed's domain, with plans to buy back long-dated debt. That's raising questions about Fed independence and who really sets the price of money. It's a fascinating power struggle that could define the next few quarters of market action. Stepping back to the weekly numbers, the winners are telling a clear story. Gold miners are on fire. Gold Fields is up 48% over the past month, Wheaton Precious Metals is up 43%, and Newmont has gained 42%. Kinross and Barrick are also ripping higher. This is a flight to safety trade, but it's also a bet on real assets. Copper just hit a record high, and the ETF tracking it is on pace for its best month ever. The hard asset trade is back, and it's being driven by a combination of AI demand, tariff threats, and bond jitters. The weekly losers are dominated by the AI infrastructure names that got ahead of themselves. CoreWeave is down 17%, CrowdStrike has fallen 15%, and Intel is off nearly 14% after a rough week. ARM Holdings, Coherent, and Credo are all down double digits. This is the rotation within tech. Money is leaving the speculative AI names and going into the ones with actual earnings to back them up. On the volume front, NVIDIA was obviously the most active name, with over 300 million shares changing hands. Intel, New Holdings, and Moderna were also heavily traded. Moderna was up nearly 9% on the day, which is a notable move for a name that's been under pressure. SoFi added 5.5%, and American Airlines was up 2%, despite the ongoing geopolitical tensions. Speaking of geopolitics, it's been 6 months since the U.S.-Iran conflict began, and the effects are still rippling through markets. Oil tankers are getting hit in the Strait of Hormuz, and OPEC Plus has lost its ability to influence the market. Wheat prices just hit a 3-year high as the Black Sea crisis deepens. And gas prices are becoming a political issue ahead of the midterms, with President Trump set to meet with refiners next week. For long-term investors, this is a reminder that energy and agriculture are real, tradable themes with geopolitical risk baked in. Switching gears to earnings, this week has been a gauntlet. We got blowouts from NVIDIA and Salesforce, which surged 20% on an Anthropic windfall and a guidance raise. Best Buy beat and raised, with comparable sales up 4.1%. Dollar Tree beat on both lines, and Bath & Body Works jumped 7.5% on a strong quarter. But it wasn't all good news. Dick's Sporting Goods got crushed, down over 30% after slashing guidance, and Wendy's tumbled on reports that a take-private bid is off the table. Novo Nordisk got downgraded to sell at Deutsche Bank, and Hormel missed on revenue.